can be outright DAX, you could be outright S&P, you could be outright the euro dollar. It doesn't mean that you have to take all three. What it does mean is it's obviously recognized that there's some value to do something on all three. So what you've got to do is figure out what the value is. Do I want to be in this as a bit of business? You can see the idea here is you're looking to buy the DAX. Well, you can see the DAX is massively discounted to the S&P. Massively discounted to the S&P. The question is the S&P massively premiumed to the DAX? You know, it doesn't tell you which one is which. What it says is that there is a spread difference available for you to try and execute against. A spread difference. The challenge you've now got is to try and execute against that spread difference if you want to do the index ARB trade. If you don't want to do the index ARB trade, what your job is, of course, is to figure out what actually is available. Now, the trade that I actually quite like is the euro dollar long trade on a retest. So that's the one that kind of makes sense to me, is the euro dollar long position. Let me take a look and I'll show you why that makes sense. You'll see that the hedge is the long euro dollar trade, right? So this is the trade. So we've obviously now got a short sell on the S&P, a buy trade on the DAX, and obviously the idea here is if you look at where the carry is and you look at where the pension fund line is, you can see that the market that's massively discounted is the euro dollar. So I quite like the idea of coming into this euro dollar on dips as part of that overall trade and try and get maybe a bit of hedge. Now, obviously, you know, if you're looking at that from a hedge point of view, then that's absolutely do dandy. You buy on dips. The other thing you can do is obviously try and figure out which market is right. Well, the market, if this is going to be a buy trade against the dollar, what it tells me is that this is where the discount is. Why? Because if the euro rallies against the dollar, the pound will be rallying against the dollar, one would imagine. If the pound and the euro are rallying against the dollar, that's risk on, correct? If that's risk on, I don't want to be selling the S&P, correct? I don't want to be selling the S&P, so I can get rid of the S&P trade at that stage. I can look to buy the DAX. So that's where the trade ends up getting traded, the long DAX position. If you still like the spread, of course, now that the S&P's rallied, you can start looking for that S&P sell reversal opportunity to add into that as a spread trade, because your spread trade's not actually, you know, the bang you get for your DAX, by the way, is very, very large. The S&P has to move a big distance for that to lose money, right? Anyway, into the cash open. You can see that that index ARB trade continued to show up on the DAX and the FTSE, allowing you to go into that position, if you like it, simply by trading 1, 2, or 3 of the lines, depending upon the other values that we see appearing on the screens, or the other values appearing on the screens. Yeah, all good? You might remember that there was a big trade on the